By March of 2026, Bitcoin had experienced a severe correction, plummeting 40% from its all-time high of $126,000. To understand the weight of that drop, look at gold. A decade ago, when the metal suffered a similar 40% crash, roughly one-third of all investors exited their positions. But the market today is facing a compounding crisis. One of the largest government cryptocurrency liquidations on record is currently underway in the Kingdom of Bhutan. The royal government recently executed a single-day transfer of $37 million to external addresses. This is part of a broader trend of sovereign selling, with their year-to-date outflows already exceeding $150 million. This creates a central paradox. Between a 40% price crash and a sovereign nation aggressively dumping its supply, the market should be in freefall. This raises the question, who exactly is taking the other side of these trades? Bhutan's treasury wasn't built through direct purchases. Instead, the kingdom utilized its abundant renewable hydropower resources to power state-run mining operations. Through this infrastructure, the government accumulated a peak sovereign wealth of nearly 13,000 Bitcoin. They are now monetizing those digital assets to fund a massive physical project in the south, the Gelufu Mindfulness City, a planned economic hub. As the nation funds this project, their holdings have been systematically reduced. From that late 2024 peak, their treasury has dropped 66%, leaving them with roughly 4,453 Bitcoin. Bhutan represents the old era of sovereign crypto, raw accumulation and monetization. Their exit marks a transition, leaving a significant amount of volume to be redistributed across the global market. While the supply is leaving the Himalayas, it is being absorbed almost immediately on the trading desks of traditional finance. In March, Bitcoin ETFs saw a staggering counterforce of $2.5 billion in net inflows. Buying was aggressive at the peeps. On March 2nd alone, funds saw over $458 million. That pressure sustained throughout the month, with back-to-back $200 million inflows on March 16th and 17th. Large institutions increasingly use ETFs as their primary vehicle, offering a regulated way to gain exposure without the custody and security hassles of holding the actual coins. These vehicles are no longer niche. ETFs now account for a record 37%. We're seeing a corporate race for the asset as well. MicroStrategy recently filed paperwork for a $44 billion acquisition plan to further increase its holdings. This massive buying machine is operating against a tightening clock. Less than 1 million Bitcoin remain to be mined over the next 114 years. While Bhutan's sell-off is significant for a small nation, its impact is being blunted by the sheer scale of global institutional demand. We are witnessing a historic wealth transfer. The asset is moving out of the hands of